Hi, this is William O'Neill India's weekly market overview for the week ending February 18th. I am Rushit Sejpal, equity analyst at William O'Neill India. So last week, there was some positive momentum in the Nifty when it went higher for the three consecutive days and it went about the 17,600 level. However, it found resistance near its 21 and 50-day moving average on Thursday and had a fall on Friday. But the volume was a tad lower on the Friday and distribution day was not added. But at the start of this week, Monday was a very tough day for the investor. Nifty was down almost 3% and it tested its 200 DMA where it found a good support. But it was the seventh distribution day on the Nifty and it was trading below all its major key moving averages like 21, 50 and 100 DMA. And also there was a lot of technical damage on the leaders, right? And that's why we had downgraded the market to a correction. So if you look at this week, it was a very roller coaster one. But there were a couple of developments from the technical front. Firstly, as I told on Monday, we downgraded the market to a correction and the low was 16,809. So now to be 16,809 as a potential bottom, we wanted Nifty to hold about that level for three consecutive sessions. But Tuesday was a very different session, right? Investors were very happy. Nifty was up almost 3% after some news that the Russia troops are moving back to their bases after a drill is over. And there were some positive comments on the geopolitical tension. But to summarize, the entire week was driven by the comments from the Russian army or the NATO or the US and all the developments around that region, right? So it was very tough for the investors. But after that Tuesday session, Nifty tried to go higher on Wednesday, but it found resistance near this red line, and this is the 50-day moving average, right? So last week also Nifty reclaimed its 50-day moving average, but it found resistance near 21 and 100, right? But this time it found resistance near 50-day moving average. For the three consecutive days, you can see the pattern is similar. Nifty tried to went higher, but it found resistance at a certain level around 21 DMA, the green line, and closed in the lower quartile. So this is not ideally a good setup when Nifty, consistently it is closing in the lower quartile of the day's range. But what good part happened is this we considered as a day one of an attempted rally because the correction low of 16,809 was not breached on Tuesday, right? For the next two days also, the low was not breached. And that's why on Thursday, we changed the market status to a rally attempt. So rally attempt doesn't mean that, okay, we are back in a confidence zone that the rally might continue again and the downtrend is over. But that is just a sign of a potential bottom. And on Thursday, we change the status to a rally attempt. So now we will look for a FTD, that is the follow through day. A follow through day is something when the Nifty is up 1.5% or higher on a volume which is higher than the previous session. This indicates that the market will be back in a confirmed uptrend. Here, our confidence to add a new stock increases. So looking forward, if you can see the technical damage, so this is from our report that we published during the last week. If you look at the report, so the relative strength of the market is very poor. So if you take the top 500 companies according to the market cap, only 23% of the companies are having the relative strength of 50 or higher. Generally, you guys know that we look for a relative strength of some 70 or 80 or higher, right? For a fresh addition or maybe trending higher. But look at the position of the relative strength line. It's too weak. If I take 70 or 80, there might be hardly any stock coming, right? That's why we tried to filter it through 50. Now, if you look at the stocks trading below 50 DMA, it is almost 57 to 60% of stocks are trading below its 50-day moving averages, right? And similarly, 38% below its 200-day moving averages. And almost 30% are forming a higher stage basis. And the most important part is the off highs, right? So if you check the average of all the 500 stock, it's 19.4% off highs. So according to O'Neill, whenever the market is more than 15% off high, the stock is more than 15% off high, it might take time to recover from that low and move higher again. So this might face a resistance whenever it is trying to move higher. So the technical damage is already done, right? And you should have a patience. It might take time to repair. Let the follow through day comes. Let the technical strength improve. Even after the follow through day comes, it doesn't mean you jump 100% into the market. You need to gradually move as and when the technical improves. So over here, now the important is this 200 DMA, right, in the lower side. And the low that was formed during the correction, that is of 16809. So these are very crucial support level. If Nifty breaks below this level, then there might be some major correction coming. At least like Nifty might go till this level or maybe even below that, right? On the flip side, if Nifty stages a follow through day as I discussed and it reclaims its 21, 50, and 100 DMA, then that might be a very positive setup. And then you should look for the stocks that are having strong fundamental and breaking out from the base, right? You should start shortlisting the stock. And today one of our report is out. You can read that report where we discuss about who can be the next leader, right? Who can be the potential leader of the next rally. And there we discussed everything sector wise, but this is just a one table from the report where we shortlisted some 8, 10 to 12 stocks that are having a strong relative strength in the weak market. You can see these all stocks are having relative strength of 75 and higher, and they are less than 15% off highs. Also, I think mostly all the stocks are trading above its 50 and 200-day moving averages. So this is a positive setup for these kind of stocks. And look at some of these stocks like basic material. Four stocks are from the basic material, right? And the transportation stock is over here. So these are something which you need to look for when the market starts rallying, because these are the ones that are resilient even in the weak market, right? So whenever the market turns higher, these stocks can give you a good return. So that's it for the today's weekly market overview. Thank you and have a great weekend.